It's the first live revision class number of September 2024 SBR session. It will not be a very long class. Since it's the first class, I really want to know how many lectures you people, each one of you have seen. Then obviously we will be studying as well. Don't worry at all. Okay, just one or two, I would say, public service messages, and then we are starting our first live revision class for September 2024 session. Just a minute. SBR, September 2024 attempt. And this is our first live revision class. Actually, the first class is not going to be very long, number one, because I really want to know first thing, how many lectures each one of you have seen. So number of students they have shared. The first thing is please try to watch lectures as soon as possible. The benefit would be if you complete your lectures as earlier as possible. Obviously, you will be having more time for the revision. Obviously, if you have more time for the revision, it is good. So at least try to follow the planner, and those students, they don't have the study planner, you should ask the admin to share the study planner with you. They will definitely share the study planner with you. In the live revision classes, what is the agenda in September 2024 for the live revision classes? Number one, we are going to cover all the ISS and IFRSs in the revision classes, obviously including consolidation. Plus, we'll be doing the, you can say, new question or recent attempt question, which are not already included in the pre-recorded lectures. Because if the question is already included in the pre-recorded lectures, so it's better to practice with me the new questions. In this way, automatically your, I would say, question bank will increase. Automatically, it will increase. And one more thing, just a quick question to one query. As you people might have seen the news regarding ACCA Study Hub, and they're saying that no more BPB and Kaplan, their content will not be approved by ACCA. So let me tell you one thing. Basically, when you prepare yourself for any ACCA paper, I would say more than 90% every student just focuses on the past papers. Past papers, nobody can change it. It's not even ACCA, BPP, Kaplan, nobody changes this. So most of the time, I would say 90% everyone relies on the practice of past papers. So I would say when we are practicing past paper, so logically you are practicing those questions which are automatically, or you can say they are already approved content by the ACCA, because who has conducted those past papers? Obviously ACCA. So I would say 90% of your preparation is based on the past papers. So you should not be hanging and thinking about these things, that what different material ACCA Study Hub is offering and what others are offering. More or less, each and everything is same. You just need to focus what we are providing you. You will be getting each and everything. And at the end of the day, every student is supposed to focus on the past papers. And obviously the past papers, they are from ACCA. So you should not be worried about these things, which are, nowadays everybody's talking. So just focus on your study. You are, from your beginning, you can just focus on your, if you just look at your history, every student obviously focuses on the past paper. Now, I've given you the agenda of entire live revision sessions, which we are going to conduct. Each and every IFRSs, plus obviously including consolidation and the new questions which are not there in the pre-recorded lectures. But definitely from here onwards, whatever live revision classes I'm going to conduct, time period is going to be a little bit longer than first class. Second, at least 3 to 4 days before, topic will be mentioned, so that you people should be having the information at least 2 to 3 days before, that what IS or IFRS we are going to discuss in the live revision class. Now, let's start the first class from IS 16, Property, Plant and Equipment. I will try to follow the same sequence in which we have our pre-recorded lectures. IS 16, Property, Plant and Equipment. I'll try to give you the complete summary of IS 16 as in a very, I would say, limited period of time. IS 16, Property, Plant and Equipment. So first thing which every student should know, that what do you mean by property, plant and equipment? Please listen to me carefully. When we say property, plant and equipment, we say tangible non-current asset. Which asset? Tangible non-current asset. As soon as we say tangible non-current asset, it means which has a physical substance. Because IS 16 says property, plant and equipment means tangible non-current asset. So it is a tangible non-current asset which is used in. Now, try to understand how many uses of property, plant and equipment are possible. The first thing which IE 16 says, tangible non-current asset, which is used in, one possibility is that is used in the production. One possibility which is used in the production. Obviously, if you are a manufacturing company, let's say the plant and machinery which you are using in production, on those plant and machinery, we will apply IS 16 property, plant and equipment. Second possibility, or the first possibility which is used in the production, there's a second possibility as well, that is supply to others. Now, what do you mean by supply to others? Let me explain that. For example, let's say you are a manufacturing company, you manufacture goods, but you are not just manufacturing those goods, you are also delivering those goods from your premises to the customer premises. And obviously, delivering goods from your premises to the customer premises, you are using lorries. So on those lorries, I'm going to apply IS 16. So we can say that those lorries are used as supply to others. Or another possibility, let's say services to others. Now, what do you mean by services to others? For example, right now I'm using the laptop to teach you. So obviously that laptop is used as providing services to others. So I'm going to apply on that laptop, I'm going to apply IS 16, provided that it is very expensive, and obviously it is expensive. And it has a useful life, obviously more than 1 year. It is tangible. I'm using it to provide services, and there are other, obviously, assets as well. So simply, the third possibility is services to others. Fourth is more important, or rental to others. Now, this is very important. Let's say you have a property the property which you have given on rent. The question is, sir, if I have given a property on rent, I'm getting a rental income. So how come I know that on that property I'm going to use IS 16? Because we are going to study IS 40 as well. One student is not able to hear me. What about others? Please quickly reply. Am I audible to others? Please quickly reply. Am I audible? So please, someone message this student, please rejoin. I think Asim, you need to rejoin, please. Please, someone message Asim that rejoin. Because it is not possible that one student is not. So thank you. Now, please try to understand the fourth point, rental to others. Actually, we will be discussing IS 40 investment property as well. When you look at the definition of investment property, IS 40 says investment property means which is kept as capital for capital appreciation, or which is given on rent, or even both. So now the question is, if under IS 40 we are generating rental income, and under IS 16 we are also generating rental income, So how to differentiate, how to decide where I'm going to apply IAS 16 on the property from which I'm generating rental income and when I'm going to apply IAS 40. Please now try to understand. IAS 16 is only applicable on the property from which you are generating rental incomes when we provide properties on rent with significant ancillary services, with significant ancillary services. The best example given by IAS, not by me, that is hotel properties. Now try to understand, try to visualize when hotel they provide a room on rent. Obviously, they do provide ancillary, significant ancillary services. There will be a one counter for the receptionist. They are going to welcome you. They will send the person with you. That person is going to guide you and so many other services. You know, breakfast, dinner, lunch, make the bed, do not disturb, and so many other things. So in hotels, they don't just provide a room on rent, they do provide significant ancillary services. But when it comes to IAS 40 investment property, we do provide our properties on rent, but we do not provide significant ancillary services. If someone is given his or her bungalow on rent, obviously on that bungalow, that person is not going to provide the services like which we are providing in IAS, which we are providing in a hotel. So basically, the difference between IAS 16 and 40 is when under IAS 16, we provide property on rent, we provide property on rent with significant ancillary services. Under IAS 40 investment property, when we provide property on rent, we do not give significant ancillary services. There's another possibility as well, or simply your admin offices. Obviously, on your admin offices, you are going to use IAS 16. So actually, when we say property, plant and equipment, so try to understand the definition which is given by IAS, not by me, that IAS 16 says tangible non-current asset, which is used either in the production or at a time. Obviously, your property, plant and equipment will be used in any one of the ways. So like if it is used in the production, so obviously I'm going to apply IAS 16 on that. If you have a property, plant and equipment which is used as supply to others, I'm going to apply IAS 16 on that. Services to other, rental to others, I have tried to differentiate it from IAS 40. And the last one is admin offices. Obviously on admin offices, you are going to apply IAS 16. One more thing, please try to understand. Assuming there is an organization, let's say APLC, okay? And that organization is having their own properties. Assuming there's a company, the name is APLC. They have their own properties. Third, they provide those properties on rent, but only to their own employees, not to the public. And they are charging less rent than the market. APLC, the company, the owner, the company is having their own properties, but those properties they do provide on rent. They're charging less rent than the market, but they're not providing those properties to the general public. They're not available to everyone. They're just available to their employees. Now the question is, should I apply IAS 40 on that or IAS 16? So I'm going to use IAS 16 on that. Why I'm going to use IAS 16 on that? Basically, you're not providing these properties to everyone. They're not available to everyone. They're just available to your employees. So I can say that you're using, these properties are owner occupied properties. They're just given to the employees, not to anyone else. Now, either you are charging a less rent or more rent. That is not the main point. The main point is they're not available to everyone. They're just available to your employees. So logically, you can say that somehow you're using those properties in your business. So if I have a property which I'm using in my own business, so I'm going to apply IAS 16. So if this question comes in exam and the examiner is asking, the directors are confused, should we apply IAS 40 on those properties or IAS 16, then obviously you are going to write the comments. IAS 16 should be is applicable rather than IAS 40. Okay. So when we say property, plant and equipment, we say tangible non-current asset, which is either used in production, supply to others, services to others, or rental to others. And there's one more possibility, that is admin offices. Now, another important point of the definition is regarding the useful life. That is, useful life is simply more than 1 year. Useful life is more than 1 year. Obviously, when we say more than 1 year, then there is no limit. It could be 5 years, 10 years, 40, 50, could be any time period. But it has to be more than 1 year. Okay. Now what? After the definition of property, plant and equipment, every one of you should know the asset recognition criteria. When do we need to recognize property, plant and equipment? Asset recognition criteria, there are 2 points. Let me just explain. According to IAS 16, and this asset recognition criteria is same in all the IASs except IAS 37. Obviously, when we'll be discussing IAS 37, then you will get to know what is the exact difference between the asset recognition criteria provided by IAS 37 and others. When we say IAS 16 and other IASs, they will give you more or less the same asset recognition criteria. You are supposed to recognize the asset when it is probable, means more than 50% chances that future economic benefits associated with the asset will flow to the entity. Simply, there are more than 50% chances that company is going to get economic benefit from this property, plant and equipment. We are not saying more than 100, we are not saying 100% chances, we are saying more than 50% chances are there that company is going to get economic benefit from this property, plant and equipment. And the second point is cost of that asset can be measured reliably. If both the conditions are met, that is, let me repeat, there are more than 50% chances that company is going to get economic benefit from this property, plant and equipment. And the second is cost can be measured reliably. If both the conditions are met, then property, plant and equipment will be recognized. And I've given this recognition criteria, each and everything is included in my notes. Okay. And very soon, I would say just right after the result, not right now, right after the result, I will also share the smart notes. I think within 55 pages, all the IASs and IFRSs we have summarized. But right now, don't go for that summarized version. That summarized version will be shared right after the result. Don't worry at all. Asset recognition criteria. After that, when we say IAS 16, property, plant and equipment, please try to understand. Initially, property, plant and equipment is measured at cost. Repeat. Initially, property, plant and equipment is measured at cost. Repeat. Initially, property, plant and equipment is measured at cost. Okay, now, according to IAS 16, initially, whatever cost you have incurred to bring the asset into a workable condition, that cost will be capitalized. Initially, whatever cost you have incurred in order to bring the asset into a workable condition, that cost will be capitalized. Obviously, if you ask me to calculate the cost, I'm going to take the initial purchase price, plus if there are any non-refundable taxes, I'm going to add those non-refundable taxes. If if there is any transportation cost which I have to bear, so obviously I'm going to add that transportation cost. If there's any installation cost, I'm going to take that, I'm going to capitalize that installation cost as well. In fact, we will study IAS 23 borrowing cost as well. If under IAS 23, there is any borrowing cost which I need to capitalize, so I'm going to capitalize the borrowing cost as well, and that will be a part of property, plant, and equipment. In fact, if at the end of useful life of the asset, I need to dismantle the asset, then present value of the dismantling cost and the restorage cost, I'm going to capitalize the present value of, let's say, dismantling cost. The entry is going to be property, plant, and equipment debit, and provision will be credited. So it is not when you are calculating initially when you are calculating cost of property, plant, and equipment, you will just stick to IAS 16. When we say dismantling cost, so obviously present value of dismantling cost, the double entry is property, plant, and equipment debit, provision credit. Obviously, when I credit the provision, then on that provision element, IAS 37 is applicable. If there's any application of IAS 23, so obviously I have to work on that. And under IAS 23, if there's a need to capitalize the borrowing cost, I'm going to capitalize that borrowing cost. It will become the part of carrying amount of property, plant, and equipment as well. In fact, if there's a government grant relating to that property, plant, and equipment, so we know that if there's a capital nature government grant, there are two possible accounting treatment. One, you can deduct from the carrying amount of the asset. Second, you can treat the government grant as deferred income. It means if IAS 20 is also impacting the initial cost of the property, plant, and equipment, so I have to consider that as well. But the main concept is initially, property, plant, and equipment is measured at cost, and each and every cost which is necessary to incur in order to bring the asset at a workable condition, I'm going to capitalize that cost. But you are not supposed to capitalize the fuel cost, cannot be capitalized. If you need to provide training to your employees so that they can utilize this property, plant, and equipment, training cost to your employees cannot be capitalized. You cannot capitalize the training cost to your employees. Okay, now let's say you have calculated the initial cost of your property, plant, and equipment. And initially, I'm repeating again and again, property, plant, and equipment is measured at cost. Assuming you have calculated the cost of your property, plant, and equipment, now what should be done after that? Now, please try to understand. Whatever the cost you have calculated, let's say you have calculated. Now, according to IAS 16, property, plant, and equipment. Now, let's talk on depreciation. According to IAS 16, when we say depreciation, so IAS 16, please try to understand. IAS 16 says depreciation is the systematic allocation of depreciable cost over the useful life of the asset. So what is a depreciation? So IAS 16 says depreciation is a systematic allocation of depreciable amount. Depreciation is a systematic allocation of depreciable amount over the useful life of asset, over the useful life of asset. Now, you need to have a really good understanding of few things. Number one, what do you mean by systematic allocation? IAS could have just written allocation, but IAS says no, systematic allocation. Then it says depreciable amount. Then it says useful life. So there are few things which you need to understand. One is systematic allocation. Let me first explain systematic allocation. Please try to understand. According to IAS 16, then what do you mean by systematic allocation? According to IAS 16, the pattern of economic benefit which you are going to get from the property, plant, and equipment, try to match the depreciation method with the pattern of economic benefit which you are going to get by using this property, plant, and equipment. Repeat. What do you mean by systematic allocation? Let me repeat that again. Organization is supposed to match the depreciation method with the pattern of economic benefit from the asset. What do you mean by this? Now listen. If your company determines that more or less we are going to get the same benefit from the asset, can I say if you are going to get more or less the same benefit, then you should be using a straight line method. So actually, the depreciation method should match with pattern of economic benefits. Simply, more or less same benefits. If the company has decided we are going to get more or less the same benefits, if you're getting same benefits every year, then company should be using a straight line method for depreciation. Under a straight line, what do we do? Cost minus residual value divided by useful life. But if company has decided no, initially the asset is new, we'll be getting more benefit and later on less benefit. If initially more benefits and later on reduce benefits, if this is the pattern, that initially company is going to get more benefits because the asset is new, efficiency will be really good. Later on, asset is going to be a little bit older, the efficiency will not be so good. So if initially benefits are more and the later on company is going to get the reduced benefits, in that, if this is the pattern of economic benefit, then you should be using reducing balance method. So please listen carefully. The systematic allocation means the pattern of economic benefit and the depreciation method, they should match. If you will be getting more or less same annual benefits every year, then you should be using a straight line method. Let me give you the example of this. Normally, when you are having a building, the owner occupied property in which you are carrying out normal business operations. So you can say normally when we are using the building, we normally get more or less same benefit. If this is the case, on building, you should be using a straight line method. But when you are using plant and machinery in the manufacturing process, then it makes sense to a certain extent that plant and machinery, okay, when they are new, efficiency will be really good, and slowly and gradually the efficiency reduces. So it means it is, I would say, then it makes more sense that on plant and machinery you are using reducing balance method. But the main concept is obviously it is the company, they need to decide, they need to determine the pattern of economic benefit, and they need to match the depreciation method with the pattern of economic benefits. Now, very important point, please listen carefully. Assuming the first 2 years or maybe the first 3 years, assuming the company was using reducing balance method, okay? Because they decided that initially we'll be getting more benefit and later on we are going to get less benefit. And this was happening. It happened in the first 3 years. But from year 4 onwards, the company has decided no. From here onwards, we are going to get more or less the same benefits. It means the pattern of economic benefit is going to be changed. If the pattern of economic benefit is going to be changed, then you have to change the depreciation method. And change in depreciation method is treated as change in estimate. And change in estimate is applied prospectively, means change in estimate affects the present as well as the future accounting period. Change in estimate does not have the effect, any effect on the past. Whatever you have recorded in the past, it will still be there. So a very important point is, if the pattern of economic benefit has changed, you have to change the depreciation method Change of depreciation method is change in estimates. Change of depreciation method is treated as change in estimates. It is not change in accounting policy. Change in estimate, and change in estimate affects the present as well as the future. It has no effect on the past. So change of depreciation method is treated as change in estimate. Students, please reply. When do we need to change the depreciation method? Please, it is up to us or something else. When do we need to change the depreciation method? Please reply. When will you change the depreciation method? If we feel it can give, no. Okay. Anyone else? If the benefits are going to increase the future, that is. Production is less in the future, will increase. Now listen, please. Simply one line. When do we need to change depreciation method? Just single line. When pattern of economic benefit changes. When the pattern of economic benefit changes, you need to change depreciation method. Repeat. When pattern of economic benefit changes, you need to change depreciation method. And change of depreciation method is treated as change in estimate. And change in estimate actually affects the present and future. It has no impact on the past. Okay. Now, we have discussed one point of the depreciation, that is systematic allocation. Great. The second is depreciable amount. So depreciation is a systematic allocation of depreciable amount. Now let me explain this depreciable amount. Cost minus residual value. Depreciable amount is cost minus residual value, or if you are at a revaluation model, which we are going to study, don't worry at all, revalued amount minus residual value. So what IAS 16 says, depreciation means systematic allocation of depreciable amount. Depreciable amount means cost minus residual value. Of course, when I'm using IAS 16 revaluation model, then cost will be replaced with revalued amount. Then my depreciable amount will be revalued amount minus residual value. Okay. Now, when we say residual value, another name is scrap value, salvage value. Please try to understand. Actually, residual value, number one concept, the residual value is an estimate. Repeat, residual value is an estimate. Actually, residual value means the expected net sale proceed from the asset at the end of useful life of the asset. For example, useful life of the asset is 5 years. So at the end of 5 years, what I'm expecting that what net sale proceed I'll be getting from this property, plant and equipment, that is residual value. Obviously, that is an estimate. Now, what I want to say, that is more important. Number one, residual value is an estimate. Number two, if after 1 year, 2 year, residual value changes, because estimate can change. If there's a change in the residual value, then change in residual value is treated as change in estimate. And change in estimate is applied prospectively, means it has no impact on the past. Change in estimate is going to have the effect in the present period and the future period, but it has no impact on the past. So residual value is an estimate. If residual value changes, then change of residual value is treated as change in estimate. So change in residual value is treated as change in estimate. Which is applied prospectively. Means the day the change comes, from that day onwards, change in estimate is applicable. It has no effect on the past. So that was depreciable amount. There's one more thing. A useful life. Now, what do you mean by useful life? Please try to understand that also. Just an example, okay? Let's say your examiner says your company has bought a property, plant and equipment, and economic life of that plant is 50 years. I'm just assuming, okay? Examiner says economic life is 50 years. Means simply this asset is good enough for 50 years. But your company says we'll be using this asset only for 10 years. The economic life is 50. But your company says no, we will be using just 10 years. Now try to understand. The useful life is 10 years, it's not 50. Actually, useful life means how many years owner is expecting to use that asset. Either you are the first owner, you are the second owner. Useful life is meaning the means, useful life means how many years you want to use it, simply. And obviously it will be given to you in exam, don't worry at all. What we need to develop the understanding, I'll come to that. So simply useful life means how many years owner, either you're the first owner or second owner, you want to use that asset. That is useful life. Now I want to say something, please try to understand. Let's say initially your company has decided that we'll be using this asset for 10 years. Can I say when you are deciding that we'll be using this asset for 10 years, I can say one thing. It means useful life is an estimate. After 2 years, after 3 years, even after 1 year, you can change the estimate. Instead of, let's say after 1 year, company can say instead of 10, we'll be using this asset only for 5 years. So useful life is not 10, it is 5. In fact, 1 year has been passed. So just the remaining life is 4 years. It could be other way around. After 2 years, company can say, no, instead of 10, we'll be using 15 years. If 2 years already they have been passed, so the remaining life is 13. What I really want to say, useful life is an estimate. And obviously estimate can change. And when estimate changes, what happens? Change in estimate is applied prospectively. Again, it will have no effect on the past. So simply change in useful life is treated as change in estimate, which is applied prospectively. Now, please listen carefully. According to IAS 16, property, plant and equipment, you need to review annually useful life of the asset. Depreciation method. Why? Because depreciation method should match with the pattern of economic benefit and the residual value. Annually, you need to review residual value, useful life, depreciation method, means pattern of economic benefits. Because if the pattern of economic benefit changes, then you need to change depreciation method. So you need to have an annual review of these three things: residual value, estimate, depreciation method. And any one of them is changes, it is treated as change in estimate, and change in estimate is applied prospectively. It will have no effect on the past. Now, another important point which you should know that, please try to understand. Actually, we know that according to IAS 16, that you need to make sure depreciation method should match with the pattern of economic benefits. So actually, those they are preparer of financial statements, obviously, they need to make sure that they should be properly determining the pattern of economic benefits, so that they should be properly using the depreciation method. Okay. Now, one more point. Let's say initially you have calculated the cost of your property, plant, and equipment, and you know now what is depreciation and what do you mean by systematic allocation, useful life, and XYZ other things as well. Depreciable amount, you know that. The definition of the depreciable amount is cost minus residual value, but that cost can be replaced with revalued amount if your company is following revaluation model. Now listen. Subsequently, IAS 16 provides two accounting models. One is cost model, another is revaluation model. Initially, we have already decided, you have to keep the property, plant, and equipment. You have to measure the property, plant, and equipment at cost. Subsequently, then you will be having two options. One is cost model, another is revaluation model. You can choose any one of them. Whenever you have a choice, that is going to be your accounting policy. Now, before going to that, let me just explain one thing. According to IAS 16, now try to understand. Assuming APLC bought a property, plant, and equipment on 1/1/2024. The amount of the property, plant, and equipment is, let's say, 100 million. Assuming the useful life is 10 years. Now try to understand. Examiner says that we bought a property, plant, and equipment for 100 million and the useful life is 10 years. And examiner says this property, plant, and equipment is available for use from 1st January 2024 onwards. According to IAS 16, depreciation begins when the property, plant, and equipment is available for use. It is very much possible that actually you are not using the property, plant, and equipment, but still you are depreciating. Because the concept says property, plant, and equipment, you need to start depreciating the asset when property, plant, and equipment is available for use. So when property, plant, and equipment is available for use, you need to start depreciating the asset. Now, it is possible. Now try to understand. Examiner says APLC has bought the property, plant, and equipment for $100 million. Useful life is 10 years. But APLC provided training to their staff for 6 months, and the actual use of this property, plant, and equipment was started from 1st July 2024. Even though the actual use was started from 1st July 2024, but still you have to depreciate this property, plant, and equipment from 1st January 2024 onwards. Why? Because since 1st January 2024, this property, plant, and equipment was available for use. So the concept is depreciation starts when property, plant, and equipment is available for use. We do not wait for the actual usage. And there's a possibility that actual usage comes later on, but you have started depreciating the asset earlier than that. because you start depreciating the asset when the property, plant and equipment is available for use. Now, subsequently under IAS 16, there are two accounting models. One is cost model, another is revaluation model. Obviously, it is up to the company to follow cost model or revaluation model, but a very important concept is whenever there's a choice, either to go for cost model, to go for revaluation model, choice means it is your accounting policy. It is your accounting policy. The main point concept is, now please try to understand, either you are going for cost model or revaluation model. If you have opted the cost model, then you have to make sure that that model is applicable on the entire class of same assets. If you have 10 property, plant and equipment, all are being used in the production. You cannot do this, that on 5 plant and machinery you are using cost model, rest of them you want to apply revaluation model, you can't do that. If you have opted cost model, then entire class of same asset, similar asset, you will have to follow the same model, either cost or revaluation model. But obviously there's a little bit, logic behind that also. When you can say it will be more appropriate to go towards cost model, when it will be more appropriate towards to go for revaluation model. Again, it is written in ISB framework that it is the duty of preparer of financial statements to opt the model which is more relevant, to provide more relevant information. Now try to understand. If there's a plant and machinery which you are using in the production, so normally the plant and machinery which we are using in the production, number one, we are not going to normally, we are not interested in selling those plant and machinery. And number two, normally that plant and machinery which we are using in the production, their value do not fluctuate so much due to changes in the market normally. But when it comes to the building, obviously when we say land and building, so obviously the land and building value changes, or you can say the land and building value has more fluctuations than the plant and machinery which is used in the production. So if someone is using revaluation model for the land and building, so it makes more sense than using revaluation model for plant and machinery. It's just a little bit logic behind that, but obviously IAS 16 has given you the option. It is up to you to apply later on cost model or revaluation model, but you just need to make sure that entire class will have the same model, either cost model or revaluation model. So subsequently, how to go for cost model, how to go for revaluation model, we need to discuss that. Plus, subsequently, when I'm going to incur, what is the accounting for the subsequent expenditures? Another point, how do we recognize the revaluation? Do we need to revalue every year? No, every year revaluation is not necessary. We'll study that also. If I'm selling the asset and the carrying amount of that asset is having a revaluation surplus, what will be the double entry? If I want to revalue the asset first time, instead of upward revaluation, if the value reduces, what should be done? All these things we are going to cover in the next class. Plus, I'll be discussing the ISB framework as well. So the remaining areas of IAS 16 and plus ISB framework, I'm going to cover in the next class. Since it's just a first class, number one, I wanted to know how many lectures each one of you have seen. And second, I just wanted to give you a flavor of live revision classes. And let me tell you one more thing. I conduct these live revision classes religiously. And I'll appreciate if you people please attend all the live revision classes. All means all. Do not skip. So, and is there any question you can ask? That's great. Because live revision classes, those students, they have already studied IAS 16, you people might have noticed, I tried my level best in a very short period of time to cover number of concept of IAS 16. So it will obviously, when is your next class? I'm planning to take the next class tomorrow, just to at least complete this IAS 16. So I'll ask the admin to share the timings, each and everything. So I'll appreciate, please, if you people do not skip these live revision classes. Slowly and gradually, I did mention just right now at the start of the class as well. Obviously, the number of live revision classes will increase and the timing will increase. The whole objective is to give you a really good live revision for all the ISS, all the IFRSs, including consolidation. So obviously, I need time for that. Timing is going to be same tomorrow. Don't worry at all. Obviously, when I'm going to conduct the class on Saturday, Sunday, then timing is going to be different. But on working days, I'll try to keep the class as late as possible. So I'll ask the admin to share the timing, each and everything in your relevant WhatsApp group. Please do give the feedback in your relevant WhatsApp group. It encourages the teacher as well as the rest of the students. So they should come and also get the benefit of these live revision classes. Schedule, obviously, you will, I think 2 or 3 days before, you will be getting each and everything. These are the just first few classes. After that, you will be getting a proper schedule, everything. Don't worry at all. So thank you very much. See you all tomorrow as well, inshallah. Have a nice life. Do give the feedback in your relevant WhatsApp group, please.